Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing the S&P 500 and where we think it's likely going in the near term. So overall, this is the daily chart. You can see that we've had a high here just above 56.60 on the overall daily chart. Had a pretty big decline, a nice little bear flag that ended up lower. Now, if we actually measure this high pivot to this low pivot and this little bear flag structure that broke down, can actually see that the downside target was 52.84, and we overshot that by a pretty substantial margin, almost shooting it by a 1.618 Fibonacci extension move. You can see that we hit a low here around 51.19. We've had a pretty astonishing bounce so far in the SPX. If we just simply look at this type of a bounce that has occurred, this is already a 4.45% bounce. If we throw on a Fibonacci retrace from that high pivot to the low pivot, take a look at what Fibonacci zone we just got a daily close above today. And more importantly, we also got the weekly candle close above that Fibonacci level. So what does that mean? Well, that likely means we're probably going to be targeting the next Fibonacci level, which is sitting at around 53.93 heading into next week. So I ultimately think there is a bit more upside in this bounce. But the question is, are we setting up for another leg lower? Is this potentially just a dead cat bounce, an oversold bounce into some previous pivot support? And is the market going to make new highs, or are we going to actually trend lower? Well, I think it's important to recognize the long-term trend. Take a look at this beautiful parallel channel. I'm going to highly encourage everyone put this channel on their chart. Pivot high to pivot low to pivot high, pivot low. And what is observed here is we actually broke outside of this channel with quite a substantial amount of strength. And you back tested the channel, had a bit of a bear flag continuation, and then you broke down and you're now trading inside of this parallel channel. Now, oftentimes markets love to retrace to a zone where it previously broke down. If we look at where the breakdown in the market occurred, this is right on this heavy volume candle, follow through, confirm the breakdown. So needless to say, technical analysis usually indicates that, again, the breakdown zone was roughly up here. We have that beautiful parallel channel acting as support and resistance. So there's a strong chance that the markets could want to retest this 5,500 level. Maybe it's over 1 week, maybe it's over 2 weeks, but certainly that is going to be a big level to watch on the S&P 500. And if we do get rejected there, there's really one pattern that needs to be continuously watched, and it's potentially forming this daily chart this daily chart head and shoulders pattern. We don't have enough right of the right shoulder to really indicate a head and shoulders, but it's potentially forming. So again, this would be a bearish pattern. If it were to get rejected here and sell off, you would simply need to now watch this next little neckline of support, which is sitting from this pivot low to this pivot low. So again, I do think that there's a bit more upside, but we've had a pretty astonishing bounce. So naturally, we should see a little bit of sideways consolidation before we make a next leg higher. Ultimately, if we get through this 5,500 parallel channel, then really it's off to the races for this gap fill at your previous all-time high pivot. But when we look at the weekly structure of this market, it's still in a very, very strong uptrend, being the fact that you're still putting in higher low, higher low, higher low, higher high, higher high, higher high. Just keep that in mind. The market is still technically in a weekly uptrend. This is a long-term view, and until we get a lower weekly high, this market, believe it or not, could still keep trending a bit higher. But we'll just have to see how price action shapes up and whether or not we truly get a right shoulder formation that occurs.